Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It's 10 past noon on Saturday the 13th of March 2021 and we're going to spend the next few minutes looking at gold. Right then, we're going to do as we always do on this channel. We're going to start with our basic technical analysis first and our Elliott wave analysis second. But first, if you're new to the chart, let's give you a quick rundown of what we've got here. All of our numbers and letters. This is our Elliott wave here. We're just going to clear that out of the way. We have 4 exponential moving averages on the chart, 10 in yellow, 20 in blue, 60 in orange, 250 in green, and 1 simple moving average, which is the 200 here in this magenta colour. We have an RSI set to a 10 close with a green 30 level representing oversold conditions and a red 70 level representing overbought conditions. We have an RSI with a 10 for the short term moving average, 20 for the long, and a 9 to smooth. We also have a volume profile which but only becomes available once so many candles are within view. I don't know why that is, it just seems to be one of those random things with a gold chart. But either way, when it is visible, which it always will be on smaller time frames, you'll see where we had basically points out the concentrations of buy and sell volume and the point of control where the peak of the buy and sell volume is, which is a yellow dashed line here. Right then, so here we are on the weekly time frame. What can we see first? We can see that we are below the 10, the 20 and the 60 exponential moving averages. We've had a cross of the 10 over the 20, yet to have a cross of the 10 over the 60 or the 20 over the 60. Still above the 250 and the 200 simple. So fundamentally bearish from a moving averages point of view. Price still below, but no def cross to speak of yet. Right then, RSI, we've come down to oversold conditions and we've had a bounce, encouraging in the short term. That is encouraging in the short term, but we can see that we can get much more oversold than we have. Here we are currently, and we've got much more oversold in the past on the weekly time frame, as low as a reading as 16, around 16, high 15, 16 on the RSI. Very, very, very oversold. We're nowhere near that oversold at the moment, but we have had a little bounce come from overbought to oversold in a significant time-consuming correction. So it's either the start of a much greater move down, or we're done and we're going higher, or we're close to being done and going higher. So daily time frame, things always look a bit more dire on the daily time frame after such a sustained correction. So much more oversold conditions on the daily time frame on the RSI, reaching 21.05. Given the visible range we have here on the volume profile, we found support right around the point of control, right around this big node of volume here in the volume profile. Some buyers stepping in here. They've had enough of the recent selling off and they're trying to make a stand here. So we've gone below the 10 exponential moving average, below the 20, below the 60, below the 250 and below the 200 simple. And we've got def crosses galore. We've got the 20 and the 10 over the 250, over the 60, over the 200. We've almost got the 60 on the daily time frame crossing over 200 with the price below. That would be very bearish from a basic technical analysis point of view. Yes, it does not look good from that perspective. Now, however, we have had a bounce from oversold conditions on the RSI, and we've had a bullish crossover of the short-term moving average over the long-term moving average. We can see, if we just expand this a bit, try and get a bigger look, let's just stretch it up, take a little bit look at the MACD here for a minute. We can see, since the crossover of our last swing high here, which is on the 6th of January around 1958, spot 676 I make it, since crossing over and getting the sell signal here on the MACD, we've come up, bumped into the longer term moving average, slight crossover here, but a more convincing one recently. We can see that the waves of bullish momentum have been interjected by these tiny little peaks of green, single bars on the histogram. This is the most convincing move out of this entire consolidation downwards from this peak that we've seen in favour of a reversal, in favour of a bullish reversal. But a lot of work to do for the bulls now to get through all of this overhead volume, all this overhead moving averages, to get out of this bearish condition and push higher. So gotta get a move on, gotta do it violently, gotta do it convincingly if we're going to turn around the technicals from a basic point of view here. So let's bring up our Elliott wave count, which changes our opinion, or my opinion, on what's happening, shifts it into a more bullish point of view. So why am I saying that? given all the doom and gloom in the basic analysis, why would I be positive or more confident in the Elliott wave analysis? Well, we spoke about how this target box was a one-to-one extension of our W projected from our X here, with this big ABC move down, that this was our target. And I felt in my last video that it was likely we could fall through this and even come lower, much lower, to a 61.8% retracement potentially, bringing us in to the prior wave, intermediate wave 3-4 on primary degree 4. But we bounced from the edge of this channel. We bounced again, and we bounced strongly. Here's where I'm taking the point from. We had a bounce here on the A wave of the proposed Y, and we've had a bounce again at the edge of the channel. Now it is possible, perfectly possible, that we can still get down to this price target. All it will take is time. All it will take is time. But this channel's holding, so all you can see is we could come up to the median line, come back down, and we could easily get towards this target. We could even come up higher to the top of the channel, giving ourselves more time, and reach this target and get down here. So bullish in the short term, but only the short term. We've got always moving averages above us. We've got what could be a completed correction down here. 5 waves down into the 5th of a C, of a C, of a Y, of the 4th primary wave. It could all be over here on this channel, and we're going to bounce high. So what do we want to see if that's the case? Well, first thing we want to do is we want to invalidate the most recent impulse wave down. Right, so we want to come back up above the completion, of, I think, when did I put this price target here? Let me just remind myself what I'm talking about. So, saying that this is a 3 wave move, right, into a Y. So A, B, C. So A, B. So really, to be sure on the shorter time frame, the pivot that I've got here is 5 waves complete into the A at 1802 spot 35. 1802 spot 35. This is my proposed A. Then a B, then 5 waves in the C. So any move back above that invalidates any further move as part of this corrective structure. So above this level. So 5 waves up into here, 3 waves up back into a 2, and then a move out of the channel would be very, very convincing that we've put in the bottom here. Now, not a guarantee though. Not a guarantee, but more convincing. So I brought, as I said in my previous video, once we got into the target box, I was starting to accumulate gold. I brought again. It's not a big deal for me. I trade some assets on shorter time frames, but when it comes to gold and silver, I'm a long-term holder, have been for years, and I will continue to accumulate because it's just, like I say, I don't like to discuss fundamentals on the channel because everyone's got an arsehole, so everyone's got a fundamental idea, and that's just the one truth in the economics and markets. Everyone's going to have a fundamental idea or a macro idea of what's going on, and everyone's wrong all the time, and everyone's right all the time, so it's all meaningless in my opinion. You've got to come to your own conclusions, figure out what they are, and then focus on the technicals. Well, I will anyway. So for me, I've got my fundamental reasons to hold the gold and silver, and that's good enough for me. You go and believe what you like. Technically, this is a good enough reason to buy it in the short term, but we need to see follow through. Like I said, so much pressure above us here, still in this channel, still above all these under major moving averages. We've got to prove that we've completed here. Got to prove it. And the only thing that's going to convince me is if we get 5 waves up into a 1, 3 waves up and down into a 2, and then we get out of this channel in another 5 waves. And then finally, if we get above this level, which is the X wave, I know it's a long way back up, 1963 spot 93, this would give me total confidence that we are in that final wave move up in the wave 5. Now, obviously, this is not normally that much of an issue because a wave 4 is normally, what did I say normally? We can expect the wave 4 to be shallower, flatter, and therefore move back up above the invalidation point, which is the internal correction of the previous high. Off you go, you're happy. This has been a very long-winded correction, taking us a lot deeper, meaning that our confidence point is a lot higher, and that's just unfortunately the way it is. But for me, you could argue that we've completed. We've done enough in retracement, we've done enough in time frame, but I have put forward the argument that we can come lower. I know I have, so let's just remind ourselves why that is. So we're just going to pick out our retracement point from our wave 2, primary wave 2 up to our high. So 50% puts us right on this pivot here inside of our 3-4 A, B, C. Primary 4 retracing into intermediate 4 would be perfectly normal. 50% retracement we've still yet to make, which is I should say 1614 spot 92, sorry, 1614 spot 92. This would be a 50% retracement. 61.8% retracement seems excessive for a wave 4, but would still be valid. The invalidation point of this wave 4, believe it or not, is all the way back at 1383 spot 78. 1383 spot 78, a long way down. I don't think we'd have to come down that low if we're bullish and we're still in a wave 4. The 50 could be a target at 1614.92, like I said, or we could have completed. Or, if, buts and maybes. I know. It's not ideal. We have to just go with what we've got. I am confident enough in the short term to have brought and to accumulated more. That's all I'm gonna say for myself. This is not trading or financial advice, but we've got a 3-wave structure in a W here, 3-wave structure in an X here, and we've got a big A, B, C structure here. 3 waves, 5 waves in a C, all trading neatly inside of this fib channel, and we bounced from it, so that's good enough for me in the short term. But like I said, got a lot of work to do. Got to see this bounce translate into a rally. We've got to see us get back above the 10, 20, 60, 250 exponential moving averages. We've got to undo the technical damage in the short term, and we've got to also put in the wave structure of 5 waves up off this low, and 3 waves back and 5 waves up, and get out of this channel. So keep an eye on it in the meantime, guys. We want to see a move up aggressively back above these levels, back out of this channel, back through these moving averages, and we want to see in the long term a move back above 1963 spot 93 to support a bullish move in the 5th and final wave up. That's gold. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, let us know what you think in the comment section below if you want to, and I should be back with you shortly with another couple of videos I've got to get out this weekend. So take care of yourselves, have a lovely weekend, all the best, speak to you soon.